Welcome to the channel. I'm the Swedish Dividend Investor. This week we got a lot of new subscribers, over 70. So a special welcome to you guys. So for today I want to give you another update on my high yield portfolio. I added 3 more companies since I added Capital Southwest. The market has beaten down the BDC sector and almost none are spared, including Capital Southwest. However, that presents opportunities for patient investors. If you want to support me, make sure to like, comment and subscribe. Your interactions really help the algo push my content to more viewers. The next goal is 1000 subscribers and we are inching closer. With that out of the way, we will go through one of the companies today and I will do a separate video for the other 2. We are going to talk about OBDC, Blue Owl Capital. A relatively new BDC, but with a nice yield exceeding 10%. For those who don't know, BDC stands for Business Development Company. The market is a bit nervous about the sector. The reason is lower interest rates. With lower interest rates, the BDCs makes less on their loans to other businesses. So the market has the belief there are dividend cuts coming. Let me give you my thoughts on this. An amateur investor using logic and common sense. First off, I believe dividend cuts will happen, but the first cuts will be the supplemental dividends. I don't count these into the yield, I just see them as a bonus. Even if they cut their ordinary dividends a bit, BDCs made good money during a lower interest rate environment during the 2010s. So, as long as we buy quality BDCs, I'm not worried about a huge cut. Secondly, I see the interest rates as a seesaw. When the interest rates goes up, the BDCs will make more money. But with a higher rate, the demand goes down since they have a higher loan cost. And the risk for defaults or non-accrual will rise. And on the other hand, when rates goes down, they make less on their spread. But since the loan costs are lower, more companies are incentivized to take loans. And usually the non-accrual rates goes down. Sure, if we have a huge crash, we will surely see the lending demand going down, even if the rates goes to 0. If that happens, the BDC sector will not be the only sector to cut dividends. We should always invest when there's blood in the streets. Reinvesting the dividends at a total crash level will bring great rewards in the future. Sorry for the tangent. Let's go back to OBDC. OBDC is a relatively new BDC, founded in 2016 and had its IPO in July of 2019. It's an externally managed BDC and it's managed by Blue Owl Credit Advisors, but they are already the second largest publicly traded BDC by total assets. Like most BDCs, they lend money to middle market companies, mostly in the form of senior secured loans, with the most part being floating rate, and companies backed by private equity investors. They also help the businesses they lend to with developing their business, since if the lender's business is great, so is the BDC, hence the D in BDC. Their portfolio is made up of 81% senior secured investments, of which 76% are first lien loans. Senior secured debt is backed by collateral, while first lien loans represents the highest priority claims on those assets if the borrower defaults. So, all first lien loans are senior secured, but not all senior secured loans are first lien. Their leverage is 1.17 times net debt to equity, and the BDC leverage average is 1.01 times, and some go to 2 times leverage. They aim to be around 0.9 times and 1.25 times, and they have gotten down from 1.26 times last quarter, so they are deleveraging. Their non-accrual rate is 1.6%, and the non-accrual rate average for the long term is around 3 to 3.8% for the BDC sector. Looking at their assets, they hold 76% first lien and 5% second lien, giving us that 81% senior secured number. Their equity stake is in 11% common equity and 3% in preferred equity. investments into equity is a bit riskier, but can sometimes come with great rewards. And when we look at their sector allocation, we can see the biggest sector is internet software and service, followed by healthcare, food and beverages, insurance, business service, and so on. If you want to see the whole list, just pause the video. Their portfolio consists of 233 companies in 30 industries, with an interest coverage ratio of 1.8 times. What about their dividend? As of their Q2 2025 earnings, they have a 109% dividend coverage. This has gone down from 130% a year ago. Remember, in the short term, lower interest rates are bad for BDCs, so there are risks in investing in them. I see it like this. Even if their yield goes from almost 11%, that's my yield on cost on OBDC, down to 8% yield on cost, that's still a boatload of dividends. I can use that to reinvest until they adapt to a lower interest rate environment. BDCs are required to pay 90% of their distributable earnings in dividends. That's the way they are structured, and it's because they pay way less taxes, just like REITs, real estate investment trusts. Their net asset value per share is $15.03, so they are trading below their net asset value. However, it has gone down from the first quarter this year. So, going forward, I will count this in my monthly income videos, but I also made a new tracker just for this high yield portfolio, so let's check that out. So, we can see the other holdings here as well, followed by some data. Currently, I have 95 shares of OBDC, but I will add around $300 to $400 more. For my Swedish viewers, that's like 2,900 to 3,800 Swedish crowns. I haven't exactly decided what companies goes in this portfolio. I want to have between 6 to 10 companies, paying a combined and average income of $100 per month after taxes. As we can see, we have the data on how much I'm currently getting. I have the total dividends paid in 2025, $42.73, yearly income forward of $559.25, average monthly income at 46.60, weekly at 10.75, daily at 1.53, and hourly 0.06. This is just averages divided by 12, 52, 365, and finally 24. Glancing at the bottom row, we can see I've invested $5,598.8, and we see a small loss as well. To the right, we can see the yield on cost for the entire portfolio, 9.99%. Just a small investment into OBDC, and that will get pushed to over 10%, which is what I'm aiming for. I also made a dividend calendar. It updates when I do new buys, and the income is after withholding taxes. Finally, I have the dividend tracker page. I will save every year's data, so this year it won't be that juicy, but going forward I think it will. I will use the after-tax dividends to calculate the total return of the portfolio, so we can track how everything is going, quarter by quarter. I think it's pretty amazing how much income we can produce with a very low capital invested. To me, 8 to 10% return is pretty good, and it doesn't matter if it's from share price appreciation or just from dividends. My goal with this portfolio is to gain at least 10% per year, and maybe some upside on the share price, to show that the high yield equals high risk isn't always true. There will be ups and downs, but in the long term, I believe this portfolio will thrive and produce meaningful income. That's it for this one, but I want to hear from you guys. Do you invest into BDCs? And if you do, what are the companies? Don't forget to like, comment and subscribe for more dividend and income investing. I'm the Swedish Dividend Investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!